Hi, this is Josh McGuire with Rising Tide Equity. I've been working on a new due diligence format and giving it a try this week. I've been looking for something that would be more engaging to investors while still conveying the most important information in my investment thesis. I think I found it, so let's go ahead and give it a shot. Company that I'm covering today is EGLT Corporation. It currently trades on the NASDAQ and the ticker is EGLT. Let's start by looking at my investment thesis. EGLT is a life science company focused on developing abuse-deterrent formulations of common opiates such as hydrocodone, oxycodone, and morphine. They are also developing abuse-deterrent formulations of stimulants such as Adderall. Their proprietary technology platform, referred to as Guardian, creates a pill that is virtually indestructible and difficult to refine into a powder that cannot be snorted. The company currently has two FDA-approved products that have recently entered the market: Sprix, which is a nasal spray used to treat short-term pain, and Oxedo, which is an abuse-deterrent form of hydrocodone. Both of these products are in the early stages of commercialization, but are currently revenue-generating, and quarter-after-quarter results are encouraging. The near-term catalyst for EGLT is an FDA AdCom meeting on August 4th to discuss Aramo, ER, which is an abuse-deterrent extended-release formulation of morphine that the company has submitted for FDA approval. This event will likely be a near-term value driver for the company. The PDUFA date has been set for October 14th. Products currently in commercialization and in clinical development are targeting indications in the abuse-deterrent market, which is currently measured in the multi-billion-dollar range. With a market cap of only $148 million and over $100 million in cash, EGLT appears to be grossly undervalued given the market potential for their commercial and clinical products. Currently, there are approximately 25 million shares outstanding, and institutional ownership is estimated at 75% or more, given the available numbers. This leaves approximately 6.2 million shares in the float, 25% or 1.5 million of which have been sold short. Given the current volume, it would take 29 days to cover the current number of shares being held short. I believe that there will be some short covering in the coming weeks prior to the AdCom, which could result in share price appreciation. If the AdCom results are positive, I anticipate that significant short covering will begin, which could contribute to a significant share price appreciation. Now, looking at some of their key statistics, see that the current share price is trading around $5.93, giving them a market cap of $148 million. 52-week range is at the low end at $4.34 and at the high end $16.59. You can see the company is currently trading in the bottom zone of its 52-week range, and with the upcoming AdCom and PDUFA dates, I expect we'll see a solid move from these levels. They're currently 25.08 million shares outstanding, and the average daily volume is approximately 52,000 shares. They have no warrant liability, but they do have $76 million in debt. $15 million of this comes from a credit line with Hercules, and they also have $61 million in senior convertible notes at a 5.5% interest rate. This level of debt and convertible notes do give me some concern, and thus I view this as a short-term catalyst play. Significant increases in revenue and FDA approval of Aramo would be a significant achievement and may help reduce this debt, but that will take time to develop. As of March 31st, they had $123 million in cash, but given their current burn rate, I estimate that they currently have approximately $105 million. This gives them a net cash per share of approximately $4.18, and they have an annualized burn rate of $68 million. Based on these numbers, it looks like they have about 1.5 years of cash left, and that is not assuming any increase in revenue from their currently commercialized products. Looking at their clinical development, they currently have two FDA-approved products that are currently in commercialization, Sprix and Oxado. Due to their products being reformulations of already FDA-approved drugs, they are able to utilize the 501 pathway, which could expedite approval. The upcoming AdCom and PDUFA dates are significant in that if they are able to receive approval using their Guardian technology, the likelihood of them being able to receive approval for future indications is increased significantly. In late-stage clinical development, they have Arimo, which has an AdCom date on August 4th, and EGLT-002, which is an abuse-deterrent extended-release version of oxycodone. In early-stage clinical development, they have two products, EGLT-004, which is an abuse-deterrent extended-release version of hydrocodone, and EGLT-003, which is an abuse-deterrent stimulant, which is likely a drug similar to Adderall, which is used for the treatment of ADD. In regards to their currently commercialized products, Sprix and Oxado, they have developed a distribution network comprised of 71 members in their sales force that are targeting over 11,000 healthcare professionals. As a reminder, Sprix is a nasal spray for short-term pain and is an NSAID that can be prescribed when there are flare-ups in those who are experiencing chronic pain. EGLT has also commercialized Oxado, an abuse-deterrent oxycodone. Sprix commercialization has been licensed to Teva for the Israeli market as well. For the currently commercialized products, they have seen substantial growth quarter after quarter after acquiring these two products in 2015. The company has been able to almost cover the purchase price of these assets in the first 2 quarters since commercialization. As evidence in the stats provided, the company and its sales force have been able to significantly improve physician prescription rates. Prescriptions of Oxado grew 176% in the first quarter, and orders increased 113% from February to March. In just the first quarter, they shipped close to $1.4 million worth of Oxado to wholesalers. Overall, gross sales of the commercial products in the last quarter was approximately $4.1 million, and this is expected to grow in the coming quarters as their sales force contacts more physicians. In late-stage clinical development, they have Arimo, which is the abuse-deterrent extended-release version of morphine, and EGLT-002, which is the abuse-deterrent extended-release version of oxycodone. The AdCom for Arimo is on August 4th, and EGLT intends to initiate and complete all the necessary trials for EGLT-002 by the first half of 2017 and file an NDA shortly thereafter. Early-stage clinical candidates include EGLT-003, which is an abuse-deterrent stimulant, and the company intends to file an IND, or Investigational New Drug application, in the fourth quarter. EGLT-004 is an abuse-deterrent extended-release version of hydrocodone and has completed Phase 1 clinical trials. Now let's take a look at what EGLT has coming up in regards to catalysts and milestones, which should help add momentum into the third and fourth quarters. The big near-term value driver will be the AdCom on August 4th. The FDA typically releases the briefing notes early, and I anticipate this will occur on July 29th or August 1st. Depending on the nature of the information contained in the briefing documents, we can expect to see some increased volatility between the release of the briefing documents and the actual AdCom date. Next, we have the completion of the EGLT-002 intranasal human abuse study, which is expected to be completed in the second half of 2016, with data to be released in the fourth quarter. Then we have the IND application for EGLT-003, which should occur sometime in the very near future, which is then followed by the completion of the Phase 3 trials of EGLT-002, which is anticipated in the first half of 2017, followed shortly thereafter by an NDA. Looking at the share structure and institutional ownership, we can see that there are a number of big-name institutional investors invested in EGLT to include Broadfin, Franklin Templeton, Fidelity, Index Ventures, Atlas Ventures, among others. Breaking down the ownership numbers, we can see that institutional ownership is over 75% of the outstanding shares. The current number of shares is a little over 25 million, making the outstanding float slightly over 6 million. Keep in mind that approximately 25% of the shares held 25% of the shares of the float are currently held short. Looking at the technical analysis, there appears to be early indications that a trend reversal is beginning to occur. Share price is currently trading in between the 50 and 200-day moving averages. Due to the low float, the share price has the ability to move quickly, so be careful if you choose to take a position. If near-term catalysts are positive, I believe that we will see an increase in short covering moving into the AdCom and PDUFA date on October 14th. Looking at the daily chart, you can see that there's been some sharp moves in share price over the past few months. This has been following the IBB, as there's a large part of the company is held by institutions. Current trading patterns suggest there is some manipulation by the market makers, and if this current move is driven by them, I see an upward movement being sustained by the market makers as the catalysts approach. Looking at the trend line, we see a falling wedge pattern that first began in September of 2015 and has continued until mid-July, where recent price action has broken through the upper trend line, breaking the wedge pattern. The possibility of a trend reversal is also evident in the weekly chart as well, further supporting the belief that the downward trend has been broken. So looking at my investment summary, what we have here with EGLT is a near-term catalyst with an AdCom on August 4th, followed by a PDUFA on October 14th. 25% of the float is held short, and I anticipate some short covering to occur into these binary events. The company currently has 2 commercialized products, and this may increase to 4 products by 2018, which could generate significant revenue. Institutions own approximately 75% of the company, and reputable institutions such as Broadfin have recently increased their stake. In sum, the company currently has $100 million in cash, a market cap of roughly $148 million, 4 upcoming catalysts in the 3rd and 4th quarters. Their clinical development is targeting indications measured in the billion-dollar opiate abuse deterrent market, which is growing rapidly. 25% of the float is held short with 29 days to cover given the recent trading volume. Add in the 75% institutional ownership, and I believe EGLT presents a compelling investment at this time. For my investment approach, I anticipate that there will be some level of short covering prior to the AdCom. These events are inherently risky, and I will sell a portion of my position sometime prior to the AdCom. Given the high-profile nature of opiate abuse, President Obama's recent allocation of $1.1 billion to combat the issue, and EGLT's close working relationship with the FDA, I anticipate a positive AdCom vote. I intend to hold a small portion of my shares through the release of the briefing documents in actual AdCom, and may increase my position if the AdCom is indeed positive. I currently hold a long position in EGLT. The opinions shared in this video are my own, and I have not been compensated for the development of any of these products. Thanks for taking the time to watch my due diligence and hear my investment thesis. The Rising Tide website is currently being reworked right now, but if you're interested in joining my email list and having my due diligence sent directly to you, you can go to my website at www.risingtideequity.com and sign up. If you have any questions or comments, I can also be reached at info@risingtideequity.com. A video version of this presentation can be found at the link below, and will give you the ability to navigate to each of the slides on your own. Thanks again for listening. This is Josh McGuire with Rising Tide Equity, helping you invest intelligently.